Hi, I'm Mike Cavanaugh, and we are live in Chicago with Crypto-Scene. We're streaming tonight on Facebook Live and sharing with Decrypt Media, a site dedicated to the blockchain global news community. Currency is believed to have started in 2000 BC, tracing back to Babylon, using metal for money. But today, with technology growing at an alarming rate, and with the US dollar's volatility, cryptocurrencies are taking center stage. More sites are starting to accept crypto, which contributes to the increase in popularity of the format. So tonight we explore the latest trends in cryptocurrencies and why you might be interested in jumping into the blockchain. What is a cryptocurrency? It's a digital currency in which transactions are verified and records maintained by a decentralized system using cryptography, rather than by a centralized authority. Again, I'm Mike Cavanaugh. My background, I'm a capital markets journeyman. I've been in trading, asset management, financial services, both retail and institutional, for over 25 years. I took a deep dive into crypto in 2017 after being introduced to it in 2012. It took me about 5 years to understand it, so I hope we can make it a little quicker for our audience tonight to understand it quicker than it took me to learn, but that might just be me, guys. And I'm here with John Devine from Blockfills and Andrew Hayward from Decrypt Media. And what I'd love to do before we jump into the deep dives of crypto is, John, maybe you could just give us a little about yourself, your background in Blockfills, real quick.
Yeah, sure. So my background, I started my professional trading journey as a market maker at the Chicago Mercantile Exchange and at the Intercontinental Exchange. I was very focused on precious metals markets, interest rate swaps, energy, crack spreads, and the sort. Also did a bit on the ag side as well. And from there, I did a brief stop in the energy compliance markets like carbon offsets, renewable energy credits. And from there, I went into a digital asset hedge fund. We were one of the larger Ethereum hedge funds in the world. And I was a client of Blockfills in that position. And from there, ended up joining Blockfills as the crypto derivative space began to evolve. And now I'm at Blockfills trading there with the team.
Awesome. Andrew, how about the same? Just a little background insight to your background in Decrypt Media.
Yeah, of course. My name is Andrew Hayward. I'm a senior writer at Decrypt. We are a site covering all things crypto, blockchain, and Web3. We cover news, we interview major players in the space, and we try to educate readers. We want to be as accessible as possible. This stuff is complex, and we all have to start somewhere. I've been with Decrypt for about a year now. I started writing for them as a freelancer 3 years ago, and that's when I started covering crypto. Before that, before joining Decrypt, I was a full-time freelancer for 15 years, covering games and gadgets all over the place for publications like Rolling Stone, Vice, and Playboy.
Very cool. My trading background, we always called it the bug. When you got into trading and you stuck with it, you got bit by the bug. Yep. Maybe you guys should share the moment of like the crypto or NFT Web3 story of like when you knew that aha moment of like, okay, this is cool, crypto's here to stay, whatever it is. Like, was there an aha moment or when you got bit by the crypto bug? I'll start with you, John.
Yeah, that's a great question. I think, I had heard about Bitcoin, let's call it 2012, 2013, and I didn't take it seriously, quite frankly. It seemed like, well, to be real about it, maybe I didn't take the time to educate myself on, what is this asset? What is the problem this asset class is trying to solve? And so my aha moment, it really happened when the Chicago Mercantile Exchange listed a Bitcoin futures contract. And at that point, I said,
do you remember when that was? Like 20?
Yeah, that was late 2017. I believe it was December 2017 or right on the cusp of January. And that's when I said, you know what? This is the future of finance, and if it's going to get through the regulatory approval process for a listed futures contract at the Chicago Mercantile Exchange, then we better pay attention. So I hit the books, and I had my aha moment, and I realized that Bitcoin has the chance to be the default currency, hard currency with that supply cap of the internet, and really take the place of digital gold.
Yeah. You said something there that really resonated, and we'll come back to it. Mm-hmm. But education, hope to accomplish a little of that tonight. But
certainly,
before you go on the next thought, What was your aha moment?
Yeah, so I'll be honest, I didn't really know anything about Bitcoin or crypto before I had an opportunity to write about it. I was probably the kind of person who would have called it monopoly money in the past. Just, it seemed far-fetched. It didn't seem real. And, when I started to get into it and started to read more about it, I started to understand the potential benefits of it and also how the technology could be used for other things like games and applications. And, I didn't really see myself having a long-term future writing about it or investing in it myself. But when I started to play with it, when I started to just put a little bit of money into Bitcoin and Ethereum and other coins and stake them and try DeFi, I started to see how kind of, I don't want to say addicting, but it's very compelling to follow it and to see all the possibilities with it. And so for me, it was just a little bit at a time, and then before long I realized this is a really fascinating space and there's so much that can come of this.
Yeah, very cool. And I like the composition of the panel right now, because we've got, you're on the trade desk, hammering out trades on, the institutional side, and you've got kind of the 30,000 foot purview of not being on the desk, but having the ability to see everything and write about it and share it through Decrypt. It's pretty interesting composite here. So we'll kind of jump in with some call them softballs, but start with you, Andrew. Trends that you see. Just we'll go a blanket in cryptocurrencies.
Sure, yeah. So one of the biggest trends that we've been seeing, especially over the last year in crypto, is just how much mainstream acceptance is picking up. I mean, at the Super Bowl this year, the biggest commercial that everyone was talking about was Coinbase, and it was just a QR code on the screen.
Yeah.
I mean, it was so simple and yet so effective because it got people to engage with it. And they were able to learn and find out and be like, oh, what is this?
Right. And mainstream acceptance, the other one was the Larry David commercial that FTX did.
Yeah,
that's right.
Celebrities, acceptance,
lots
the
of
Coinbase
celebrities.
was definitely one too.
Yeah, lots of celebrities getting into the space. LeBron James and Matt Damon doing commercials, and while they do get some pushback to that sometimes, it is, interesting to see how big names and major faces can be associated with crypto now. We're also seeing a lot of banks and financial services embracing crypto, hiring big time to push further into that space and see what they can do with it too.
That's right. Yeah, I think you nailed it on the head there. So crypto needs mainstream adoption. The biggest challenge is education. And so how do we take these catchy, events like the Coinbase commercial or these celebrities that are getting involved? How do we go further and really engage with people and educate them on the importance of this asset class? What can be done? I think you're going to get into a lot of the stuff that can be accomplished in Web 3, which is going to be absolutely game changing and fascinating. But then really going back to the core mission of Bitcoin. And I think in this period right now, we're kind of losing a bit of focus on that core mission of Bitcoin, which is being hard money. Bitcoin came out of the great financial crisis, and reverting to that thesis, I think is going to be very important for the mainstream adoption and why it's going to make a lot of sense for people to join in and get involved.
Yeah, and then so past the mainstream adoption, and that was good coverage there. And we'll keep. I'm sure education will keep popping up, and we'll throw some more nuggets of information for the audience, both streaming and live, about how they can get educated and resources that exist for education. But so mainstream adoption, let's say we got it. What comes after mainstream adoption?
Yeah, another big trend that we're seeing in the space is coming regulation. There are a lot of Bitcoin diehards that want nothing to do with that. Very libertarian kind of perspective. They just want to kind of stay in the shadows. They don't want to have Big Brother looking over their shoulder. But it's coming. We're going to get regulation, and I think the good thing is that the crypto industry is working to be a part of that. Or a lot of the crypto industry, they want to have a say in it.
Certainly, and this, I guess this just takes me back to that theos of Bitcoin. Regulation is going to be extremely important in this market, as I think what we've seen in the past 2 years is some of these new emerging protocols, like in DeFi, for example. There's some activity going on that might not align with that original theos of Bitcoin and the broader crypto market, quite frankly. And I think the regulators are going to play an extremely important role in aligning investor interest and project developer and protocol developer interest. That's going to be extremely important. This market has no place for bad actors who are looking to take advantage of hype or looking to take advantage of low-hanging fruit in terms of yield that seems too good to be true in a sense. I think that's going to be a very important point for regulators to stomp out, and I think it's welcomed by those who are on the institutional side of this, and certainly by the emerging mainstream adopters.
Yeah, and when we're talking about regulation, we're talking about like the SEC or the CFTC, like U.S. regulators.
Yeah.
Yes.
One thing, and maybe you can comment, one thing that puzzles me is how other countries like Great Britain or England has the FCA, Canada has IROC. They have regulations in place in other countries, and you see companies starting here that are like, Blockfills gets fined this, and we don't want to deal with this, and you see innovation and energy getting pushed out. Do you think that has any effect on companies that start here versus other places, or does that put pressure on the U.S. regulators? I'm just curious, because I'm puzzled by it all the time. Like, why hasn't the U.S. regulators made the regulation? Just curious, not to go down the deep rabbit hole of regulation, but just curious if you guys have thoughts on that.
Yeah, I think the U.S. regulators want to make sure they get this right. The United States is the largest financial markets in the world, and when they do hash this out, it needs to be hashed out properly and well thought out. And I believe from what we can see thus far, the SEC and the CFTC, they're not stifling innovation, in my opinion. They are taking a very focused approach on how can we best structure this framework to allow innovation in a very responsible manner. And I actually welcome that I would say that approach to being sure that they get this right instead of just rushing out some stuff so that they can, kind of claim to be doing something.
Yeah, and very well said. Yeah,
and there's a lot of crypto startups in the U.S. that say that they want regulation. They want the guardrails so that they can build businesses the right way, and they don't have to go back in a few years and say, oh no, we made a huge mistake. We invested all this time and money. In March, President Biden had an executive order basically ordering the various federal agencies to get smart on crypto, like start making progress in this space, because it has been very hands-off for such a long time. And I think, most of the industry's reaction to that was, this is fine. This is a positive thing. People were afraid leading up to it. There were a lot of rumors around it. But what came out was pretty open-minded and optimistic, saying, we want to encourage innovation in the United States. We don't want all these companies leaving our shores and building power elsewhere in the world.
Yeah, and it's still early in the space. If you missed out on Bitcoin in 2009 or Ethereum in 2013, there's a whole world of blockchain and crypto adoption that still lies before us. And one of those areas that really excites me is DeFi. And I'm curious, what trends you're seeing in the decentralized finance world.
Yeah, DeFi is one of those big topics in the crypto space over the last couple of years, especially. DeFi stands for decentralized finance. It is platforms and protocols that are governed by code, basically. It's smart contracts. So it's not like you have an intermediary or you have a person or an agency that is overseeing transactions. It's all in the code. It all happens automatically. And that just unlocks all these kind of new services and capabilities. You can earn a lot of yield or basically interest on your crypto holdings. There are opportunities for loans and other services that potentially are better than what we get from the traditional banking industry.
Yeah, DeFi is one of the most fascinating parts about this, let's call it the past 4 years of evolution in the crypto markets. I think what Uniswap accomplished in terms of being able to access liquidity without a direct counterparty is fascinating. And the amount of volume that they were able to process across that protocol is extremely impressive. So the the type of technological innovation and the merging of finance there is really what makes me optimistic on this space, because we can't quite see what is going to happen from all this technological innovation. So DeFi, from the perspective of accessing liquidity without a counterparty, is super interesting. Now, of course, we're going to start talking about where there's regulatory risks there eventually. I think also the lending and borrowing protocols are very interesting, and the way that they're able to manage risk on an auto liquidation perspective, that's certainly interesting as well. What does make me a bit nervous about DeFi is a lot of these protocols are incentivizing participation by offering yield, and oftentimes that yield comes from a token that is associated with the protocol. I don't know how sustainable that model is. It seems to me that it's backed, there's venture capital backing that type of approach. How loyal is that user base when those yields go away is yet to be seen. But the innovation is extremely impressive.
Yeah.
It still feels a bit like the Wild West there. I mean, you could say that about all of crypto, but especially DeFi. Like, a lot of it is still new and experimental, and we do see failures.
Yes.
And there is a lot of risk. It's also very difficult to use for newcomers. So
that as well, that user interface experience is not there, right? And then I think you're also getting into the unknown unknowns with what are these risks to interacting with these protocols. We have seen some hacks happen, right? And I think those things are very hard for someone who is deploying capital to really measure. And how do they assess that risk?
Yeah.
That's still very much a difficult
assessing the risk. You know, it's kind of like it's mind-blowing, right?
Yes.
Because it takes so long, or at least it took me so long to understand like Bitcoin. You know, like when I first started learning, like, what's a Bitcoin, or can I buy that with a Bitcoin? Like, it took so long for me to like get that, and like once I got it, I'm like, okay. And then it's like the technology is moving so fast. I've got Bitcoin down, then Ethereum comes out a couple years later, and you're like, okay, like what's the difference between, like you have to get like deep into it to understand, like from a tech side, but you know the utility and the adoption, and then you add DeFi to it, and it's like,
yes,
we haven't figured out the regulations in the centralized finance. And the utility and adoption isn't completely happening in like centralized finance with cryptocurrency, with like Bitcoin.
That's right.
And now you've got all this DeFi stuff. So like, I'm just curious, like what resources are out there for the education in DeFi, or how did you learn DeFi?
You know, what I like about DeFi is it's happening so fast. The prerogative is on the individual to educate themselves at this point. I think you need to interact with these protocols. There, of course, are resources that you can find and utilize, but we're almost at the point in this evolution where those who are grasping these concepts, they're just getting their hands dirty. They don't necessarily have it all figured out at the moment they start to participate. But once they do, I think you were alluding to this a bit with your Bitcoin journey, once you do start to get involved and you start to press the buttons a bit and interact with the protocol, then I think the light shines a bit, and some of these concepts become a little bit less blurry.
Got it.
Yeah, as I said earlier, you know, I didn't really grasp crypto until I started playing with it, until I held some and I transacted with it and I tried using different protocols. So that's what I recommend. Play with it. Start very small. You know, only use what you're willing to lose.
That's right.
Even if it's only a few dollars, you can, you know, grab some coins and start playing around with it and see what you get from it.
And I'm wondering, you know, maybe you see it with your client base or your reader base. Is there like a generational gap here? I'm guessing there is, but like, do you see mass adoption coming from, you know, I'm a Gen Xer, I'm 47.
Yeah.
The generation above me, you know, the baby boomers, or below me, and, you know, the millennials and Gen Z, like, where does that adoption come from? Do you see it happening in Gen X and, you know, in the baby boomers, or is it all coming through the younger generations? I'd be curious.
I feel like it's mostly younger folks, and you know, a lot of it comes from distrust of institutions and government, and then also, you know, we grew up on the internet.
That's
and
right.
so internet money makes sense to us. It still may be new and you know, hard to use in some ways, but it clicks for us in a way that it doesn't for older generations.
Yes, I agree with that. Now that said, I do think there are older participants in these protocols because they're fascinated by the technology and also the financial opportunities as well. So portfolio managers of all ages really had to educate themselves this past, let's call it 18 months, 24 months, on what is happening on those protocols. If you're a portfolio manager and you're dipping your toes into digital assets, they are educating themselves on this stuff, and they are, there's certainly a number of them that are participating in that sense as well. So yes, I would say it's predominantly going to be a younger user base, but that's not to say that this is a multi-generational technological revolution.
Very cool. So we're going to take a commercial break in 1 minute. So
Okay.
talk as
1
fast
minute
as
of
you
NFTs.
can
Okay.
about NFTs.
NFTs are blockchain tokens that serve as like a receipt for something that you own. It can be a digital item like a profile picture or illustration or collectible. It can also represent real world things like mortgages and stock certificates.
Mm-hmm.
We see kind of goofy, ridiculous, very expensive things like Bored Ape Yacht Club avatars that are like these Twitter avatars that sell for millions of dollars. That sort of stuff is a little crazy, but we're also seeing real practical use cases, and there's a lot of opportunity and possibility there.
What I'm getting excited about.
15 seconds.
We got
before
15
we
seconds.
break.
Okay.
Commercial break. So
Yes,
talk really
all right,
fast.
real quick. What gets me excited about the NFT space, I'm getting into the music side of it and being able to control that copyright and really prove ownership, and then also make royalty on the redistribution of that digital asset, which is an audio file.
Yeah.
And of course you can go to video, and obviously art is the big one. I'll wrap by saying I think carbon offsets as well are quite fascinating from an NFT perspective, and also renewable energy credits and accessing these markets via Web3.
Yeah, very cool. All right, we're going to break for commercial, and we'll come right back.
Perfect.
All right, we're back from the commercial break. We didn't get to see the commercials. I wish I would have known what the commercial was. Anyway, we're back. We had just getting juicy on NFTs. We're going to kind of shift it back, and the leader in technology advancements usually is financial technology, like FinTech. Mm-hmm. Blockchain comes around, Bitcoin. John, you're on a trade desk, institutional.
Yep.
Before we jump into some strategies that you see, hedge funds and institutions and retail traders using, would love to get your viewpoint of the evolution of, we'll go with Bitcoin or just cryptocurrency in general, 2009 to today, just a brief evolution of how you see the marketplace.
Yes. So the evolution of this market is absolutely fascinating, and I think right now we are experiencing the institutionalization of this asset class, quite frankly. So if we take a step back to Bitcoin's inception, it was really a peer-to-peer marketplace. It was not easy to acquire Bitcoin, to trade Bitcoin, right? So that peer-to-peer model was not sufficient for adoption. And then you see, so from peer-to-peer, you see the first advent of exchanges. And so now you go peer-to-peer, then you have exchanges. Now we can trade spot Bitcoin on an exchange. From there was an innovation in terms of perpetual swaps. So perpetual swaps then became a thing where you could buy and sell a derivative of Bitcoin. Once perpetual swaps was accepted by the trading community, and this is early on in crypto, I'm trying to reference it, let's call it 2014, 2015, that time frame. Once that market started to firm up, then you had the opportunity for a lending and borrowing market to develop. And from a lending and borrowing market, now you can have an options market. And from an options market, now you can have a futures market. And now we're really getting to that 2017 moment I talked about earlier when the CME listed a Bitcoin futures contract. That's a huge inflection point for this asset class. That made Wall Street wake up to this asset, and then in turn it drove a lot more media attention on the asset class, and from there even more adoption. So that's been in a very quick way to say it, that's really been the evolution of how this market has come on. And now here we are in 2022, and we are firmly within the institutionalization of Bitcoin and crypto.
Yeah. what took the financial markets as we knew it, pre-Web 2, pre-Web 1.0.
Yeah.
Like the first markets, people would go to a market with baskets and trade.
Yes.
In the BC era, like all the way to exchange the tulips and options on rice in Japan, like thousands of years of evolution to create efficient marketplaces. And we're in Chicago, arguably the CME created the most efficient marketplace that's ever existed with the CME futures and the electronic algorithmic HFT marketplace they've created. And that got clashed into a new market, and we've had more evolution in 13 years than traditional markets did in thousands of years.
Certainly, that's what's been really a spectacle to witness, and especially when you're participating regularly within these markets. This has been what's occurred in 13 years. I think has been put on hyperdrive because a lot of the lessons that were learned in these other assets you're referencing over thousands of years were able to be applied, and that really accelerated that type of evolution, for lack of a better word, for this asset class. And then, no one could have seen DeFi coming, quite frankly, and that's just another iteration of the evolution.
Yeah, very cool.
I was going to say, speaking of the rapid evolution, just think of how Bitcoin started as, this little project by a handful of people, and Bitcoin was worth what, pennies at first?
Yes.
And now it trades for $21,000 right now. It has been as high as what, 60?
Yes, upper 60s
or something,
just below 70,
and trades around the world. It's an incredible shift.
Yeah, and still it's at 21,000. Like if you got in early enough, you're still up massive amounts. If you got in at the top, dollar cost averaging, HODL. I think it's HODL where the D is in front of the L.
Yes.
But let's talk about derivative strategies using cryptocurrencies.
Yeah, so Bitcoin has been allowed to become institutionalized because these types of players are now able to manage risk. You were very unlikely to see institutional adoption if there was no way to manage risk, quite frankly. And when I'm talking about hedge funds and proprietary trading desks and that type of a participant. So that has really led to, and I talked about that evolution, going from spot to perpetual swaps to a lend borrow to an options market to a futures market. That's opened up not just risk management, but also opportunities for yield generation. So I'll talk about a very simple strategy, and this is a strategy that's borrowed from the stock market or from commodity. It's called a covered call strategy, and to use some crypto lingo, I call it the optimized yield. And a call option is the right to own an asset at a predetermined price on a predetermined expiration date. So let's say Bitcoin's trading at 20,000. We're currently in the month of June. So there's going to be call options that are going to expire on June 24th, which is the last Friday of the month. That's the industry standard for options expiration. So let's say we're at $20,000 for spot Bitcoin today. There is a call option, the right to own Bitcoin at 25,000, at 30,000, at 40,000, at 60,000 by June 24th, 2022, right? And as a holder of Bitcoin, you can sell those call options. You can sell someone the right to own your Bitcoin at that predetermined price. And there is a price that a trader will pay to own that option. So now if you own spot Bitcoin and you sell covered call options, you are long the asset class, but you are generating a yield every month or however you execute those options trades. And that opens up a lot of opportunities for portfolio managers and really opens the door for this asset class to be taken seriously by those types of participants.
Yeah, and that's not new to cryptocurrencies, right? I mean, I think the first call option was traded here in Chicago on an exchange. Technically, the call options existed in the 1500s, but an exchange-based listed equity option traded in Chicago in 1973 on stocks, right?
Yes.
So this isn't a new paradigm shift. It's just different. So why would I buy Bitcoin and sell a call to optimize my yield and not buy the S&P 500 and sell a call against that?
Yeah, I think it's that diversification that portfolio managers are now taking seriously, and they're saying, okay, so Bitcoin's not going anywhere. We buy into the thesis that this is hard money, that is digital money being used on the internet for commerce or for store of value purposes. So if they do have to participate through diversification of their portfolio, instead of just holding the asset, they are going to want to be creative, and they're going to want to figure out ways to maximize that position, and that's going to be done by finding yield in the market, and that's typically found in that options market.
Cool. One, I'm just going to keep coming back to the big Chicago wins.
Yep.
So Options Express, Thinkorswim, those were companies that were started here in Chicago, equity options.
Yep.
They made it real easy. You could open an account, I could buy the stock and sell a call, and there was like education within the account.
Yes.
I could learn what a covered call was. Like, what's our industry doing, crypto industry doing? Couldn't they just go back and look at what Options Express and Thinkorswim used to do and be like, here's your education, here's how you execute. How do I, Mike Cavanaugh, open an account in crypto,
Yeah.
buy a Bitcoin,
Yep.
sell a Bitcoin call, as easy as the Options Express guy and Tom over at Thinkorswim made it for us?
That's happening right now. Okay. So the first step was really to build a market. I mean, these options markets, let's say, are 3 years old, 4 years old. We're really talking, and I'm talking actively traded options markets. When the CME listed at the end of 2017, there really wasn't much action. It takes time to build that liquidity and that flow. So now that there's an established marketplace and the institutions are participating, that's trickling down to the more retail type investor. There's companies, like TradeStation, for example, to kind of roll on this. I think they're leading the way in providing access to the retail participant in these types of derivatives, and also on the education. I think we're going to see a tremendous tailwind for that type of approach to the retail client base.
And we keep talking, and I promised at the beginning we'd come back to education. Either of you, where do you educate yourself? Or if people ask you, John, Andrew, what's a crypto? Where do I get a crypto, and how do I educate myself on a Bitcoin? And where do you go?
I mean, I don't want to shill too heavily here, but Decrypt is a fantastic resource for this.
I'll second that.
Thank you. I will honestly say that as I was learning about crypto, I turned to a lot of we call them learn articles. We have these very approachable articles about it, but we certainly aren't alone. There's a lot of other websites that have educational information. There's a lot of YouTube videos, shows and events like this are certainly great resources too.
I agree. I mean, I'll second that on Decrypt, and that's a great resource there.
Very good.
Thank you.
So we got the covered call.
Yep.
Any other strategies that you like, or your go-tos, so to speak?
Yeah, I kind of want to run through it here. So we talked about what is a call option, that the right to own an asset at a predetermined strike price at a predetermined expiration date. Well, now there's also put options, which are protection to the downside, the right to sell an asset at a predetermined price at a predetermined expiration date. So with this crypto lingo, I'll say the optimized HODL. And the optimized HODL is selling a covered call, as we just discussed with the optimized yield. But instead of taking that proceed as a yield and putting it in your pocket, you take that proceed and you buy a put option. And typically you can buy you would structure your trade where you buy that put option at zero cost. So whatever call, I sell a call option, whatever put option I can purchase at zero cost, that's a structured trade. So now I'm long Bitcoin, I'm short a call option, and I'm long a put option. And what that put option does is it allows me to define my risk. And instead of just owning Bitcoin and going through the market gyrations, I'm proactively structuring trades that allow me to participate in the asset, but with a predefined risk management structure on where is my risk.
Yep. That's another one of those, it takes a while to understand options.
Yeah.
If you learned options, because you had the benefit of being an institutional trader at a hedge fund, at the Merc,
Yep.
But if you're just learning Bitcoin and then you get thrown the optimized HODL strategy, in the equities world, we used to call it a collar.
Yeah.
It's a collar strategy,
That's
but
right.
now it's an optimized HODL. It's double,
Certainly.
Are there any, like, I know in the equity options world, there's groups like the Options Industry Council that's like a nonprofit that educates people. Are there like nonprofit education sources in crypto that, I don't know, I'm just asking because it would seem like that might be a good educational source.
Well, shameless plug. So I will be having, I'll be having a book coming out on this, not too long. So it'll be called Introduction to Bitcoin Options, and I think it'll be very palatable. And hopefully the information is presented in a way where a retail participant can grasp this and feel comfortable getting themselves into a structured position. I think with Bitcoin, it's a little bit more intuitive because you naturally understand that this is a very volatile asset class. So like when you go to buy a stock, you're not necessarily expecting massive gyrations in price.
Right.
Okay, you're maybe comfortable owning that stock for a long time and you believe in the company. And okay, but with Bitcoin, for example, you want to participate in digital gold. Well, we know how volatile this asset class is. So understanding the concept of managing risk makes a little bit more sense intuitively, and then just spending a bit of time with a well thought out explanation on this stuff. It's really not too difficult to get there.
Yeah. That's awesome. I didn't know. Congrats on the book.
That would be too much farther.
No, looking forward to reading it. I mean, it's because I came from the old school options world of equities, and loving learning everything about cryptocurrencies and Bitcoin. Curious, one strategy we used to use back in the day in equity options was we called it the wheel of fun, but it was selling a put, like cash secured.
That's
which
my
is
next
kind
one.
of, it's kind of, I won't steal any thunder on this.
Sure, and I love it. It's actually a perfect segue. So we talked about optimized yield, which is selling that covered call. We talked about optimized HODL, which is selling a call and buying a put at zero cost, defining your risk. Well, as you're saying here, Mike, selling put options is also a very interesting strategy, and I call that the optimized FOMO. To continue along this jargon. So fear of missing out is a typical mentality of a crypto market participant, especially someone who might be a bit new to the industry. So as I said, when you buy a put option, you're buying the right to sell that asset at a predetermined strike price at a predetermined expiration date. When you sell a put option, you are on the other side of that trade. You are saying, I will buy this asset at this price.
Yep.
And I want to get paid to be there to buy your asset if it goes below that strike price. So let's say Bitcoin's at 20,000. You can do put options, let's say at 15,000. And if I'm a buyer of a put, I want the protection. If I'm a seller of that put, I want the yield in exchange for the obligation to own your asset at 15K if we were to trade below that level.
So it enhances your position.
Certainly, and it's also an interesting way to get into
the market.
Yes.
I love it. John, Andrew, awesome overview on mainstream adoption, regulation, NFTs. I know we didn't get to the Web3. We're going to get there with the audience in a second. John, thank you for the insights on the evolution and some strategies within. Can't wait for the book to come out.
Yes, sir.
I'm going to start reading your website for your articles every day. Thank you for that. And thank you to our audience, IRL, as they say, and in the metaverse. We were streaming and have a live audience today. Thanks to John and Andrew for the great responses and insights into the crypto Web3 space. And thank you to our sponsors, Blockfills, Decrypt Media, and Dream Productions. I'm Mike Cavanaugh, and we're signing off on the crypto scene, and we'll see you next time. Thanks for coming.